Welcome to accounting. This is the homework that we're going to go over today. Page 283, accounting in the real world. Number one, discuss Best Buy's strategy for maintaining local brands. What impact do you think the strategy would have on employees of an acquired business? So some sample answers. Maintaining an existing brand name takes advantage of the loyalties of both customers and employees while enhancing the product offerings. Most individuals avoid change, therefore maintaining the existing local brand avoids one issue that can cause employee discontent. And number two, what accounting problems might exist in combining the accounting systems of two businesses? Sample answers. Two businesses will likely have different computerized accounting systems and chart of accounts. In addition, their styles and numerical sequences of source documents would be different. Other procedures, such as the preparation of bank statements, must become uniform. Our learning objectives today: explain the relationship between the accounts receivable ledger and its controlling account, and record sales on account using a journal. Here are some definitions from today. You need to know what the selling price is and what markup is, and an accounts receivable ledger. We're going to talk about subsidiary ledgers and controlling accounts, something we've done a little bit of with vendors and accounts payable. So you have your subsidiary ledger for each customer, just like we do for the vendors, and it all flows to the accounts receivable ledger, which goes into accounts receivable in your general ledger. And that's called your controlling account. We're going to look at the subsidiary ledger account. This should look familiar. It's very similar to the vendor ledger account. You have your individual customer account, and it flows to your accounts receivable account or your controlling account. So notice there's the same same headers. You have your account name, account number, you have the date, balance, check mark, and your beginning account balance. Sales tax, we should all be familiar with that. Every time we go buy something in the state of Maine, just about everything has sales tax on it. So hopefully that's not new information. We're going to look at the sales journal, which is a special journal used to record only sales of merchandise on account. It's very similar to the purchases journal in the last chapter that we did, where we're only recording accounts receivable activity. Sales invoice, you've probably seen these before. It says invoice right at the top, has the company that's selling the thing, who's buying it. It lists all the information you need to know. You have quantity, the item number, description of each item, a unit price, and then the line total, which for the top one there, you have 10 packs of copy paper, $25.49 each, and if you extend that out 10 times $25.49, it equals $254.90. So then each item is listed, subtotaled, they add the sales tax, and then you get your total. And up at the top of the invoice, it tells you the invoice number, the date of the transaction, the customer number, and the terms. In this case, it's 2% in 10 days, or net due in 30. And we've discussed that in prior lessons. So now we're going to look at how to recognize a transaction. November 4th, sold merchandise on account to Wells Apartments, $454.50 plus sales tax of $27.27. So the total is $481.77, and the sales invoice number is $498. And on T accounts, our accounts receivable is going to go up. That's a debit transaction because accounts receivable is a asset or an asset, and sales is a credit for $454.50. It's a credit because sales is under revenue. And then we have to recognize a sales tax payable. That goes up. We owe that money to the tax authority, whether it's the state or the or the federal government in some countries. Here's our sales journal for uh, November 4th, and our customer name, the invoice number, and then total amount owed by the customer is the $481.77. That goes into accounts receivable as a debit. And then we have the price of what we actually sold. So what our company is actually going to get from the transaction. And then the $27.27 is the amount we're collecting on behalf of the state. Our selling price and markups related. Markup is the amount added to the cost of merchandise to set the selling price. What is the relationship between the accounts receivable ledger and its controlling accounts? The total of the accounts in the accounts receivable subsidiary ledger equals the balance in the controlling account, which is accounts receivable. Remember, this works exactly like the vendor ledgers and the AP accounts payable as the controlling account for the vendor ledgers. What column on a general ledger form is not on an accounts receivable ledger form? And credit balance. What is the title of the general ledger account used to summarize the total amount due from all charged customers? Accounts receivable. Our sales tax rates usually stated as a percent of sales. Why is sales tax collected considered a liability? The amount of sales tax collected is a business liability until paid to the government. So we need to pay that money to the state. That is not our money, but we collected it on the state's behalf. All right, so the 10-1 work together will be in a separate video. After that, your homework will be 10-1 on your own, 10-2 audit your understanding, and page 296 why accounting.